looking at the hardest thing that I've ever done is venture capital fundraising. I've got founder friends.
Yeah, me too.
40. Yeah, exactly. Because you're on the other end where you're
Yeah.
actually raising from LPs for your fund to invest in founders, right? Talk a little bit about, let's first start with traditionally speaking. Someone goes to raise a friends and family round. What does that amount look like? Is it 50,000, $250,000? Someone goes for a pre-seed round up to how much, and then a seed round up to how much? And what are kind of the revenue thresholds that, just generically things kind of fall into line with?
Yeah. I think friends and family is, hey, I have a proof of concept MVP. I've been hacking on something at night. Maybe it's just a slide deck, up to 250,000 typically. And that just really comes down to how many rich people do you know, friends and family, who are willing to part, with a, 25K or 50K. There's this famous example of Jeff Bezos going around to his friends and family, trying to raise money for Amazon and basically forcing his parents to invest, which ended up being worth that 25K check or whatever it was, being worth billions of dollars, obviously. He goes, no, you need to give me the money. This is going to be big, which is really funny. But yeah, that's the friends and family. And it's difficult for me as a VC, right? Because I've had to turn down friends and family for money because I don't invest in friends and family rounds. Maybe in the future, if I'm, sitting on 7, 8, 9 figures or whatever, I don't really care. Here's 25K, but that's not me yet. So that's typically the friends and family. Pre-seed is could be as small as 250, but typically it's 500 to a million and a half. And these caps, the valuation cap, which is the valuation of the company that you're buying into, can be as low as 2.5 in a pre-seed up to 10 or 15. I mean, some of the AI stuff you see is pre-launch, pre-rev at 15 or $20 million caps. And then you get into seed, and seed is an amorphous term because on one hand you got like Y Combinator companies coming out and calling their rounds a seed, which is they're really pre-seed because they're scratching on back to the pre-seed. You probably have 5 to 10K of monthly recurring revenue, typically somewhere in there. But seed, you're starting to get some pretty significant revenue, maybe 20, 30. Even up to 40 or 50,000. I've definitely been in some deals where, they got 600,000 of ARR and I'm able to get in at a 6 or 9 cap, $1 million cap. And then, so that's the seed. And seed can be like as low as $1 million up to 2 or 3, even 5 million. There's a big disparity there, a big range. And seed today is really what A was 10 or 15 years ago. Things have gone progressively earlier. And then there's the seed extension, which is like, oh crap, we didn't get to, the million or 3 million of ARR that it takes to get to an A. So let's do a seed extension, take a little bit more dilution on our safe and hit some more milestones before we get to A. And A has become a big milestone for startups. If you get to a Series A, that means, okay, you've really worked hard and really got something here. You probably have $1 million up to 3 or 4 million of ARR, annual recurring revenue, and it's a big milestone. It's typically a priced round versus all the other rounds before it are, on a safe or a simple agreement for future equity or convertible note. So you've really reached a big milestone in your journey, and typically the investor's writing, $1 million up to even 4 or 5 million into the round. And they're taking a board seat and things like that. So,
gotcha. That's super helpful. And actually, it's right in line with exactly what we have been doing as well. When we raise pre-seed, 230,000 right there. Not pre-seed, excuse me, friends and family, 230,000. And then our pre-seed, we're sitting at about 680,000 right now. And the goal was to get to about 1.2 million on the pre-seed. You nailed it. We're at a $4 million valuation cap for those, the people are listening in terms of what we do, what we've done. And I'm just talking about my experience. I'm not talking about soliciting for investments. But that having been said, and then, we're sitting at that 10,000 in ARR, and the goal is to get to that first milestone, which is 25K in MRR, right? So that's where you're sitting right there at in terms of driving towards that particular goal. And then the next one will be seed round, where you're looking for about 3.5, well, anywhere between 3 to 5 million. But for us, our target would be about another $3 million worth of investment. So you nailed it in terms of exactly our path and what we're doing. Now let's talk about, again, looking at the hardest thing that I've ever done is venture capital fundraising. I've got founder friends.
Yeah, me too.
40. Yeah, exactly. Because you're on the other end where you're actually raising from LPs for your fund to invest in founders, right? So you're doing the same exact thing. And when I talked to founders, it was interesting early on. A lot of my founders who had been successful and have done Series A, B, C, and or D, they got to those particular points, all said, listen, if you're not doing 200 to 350 venture capital meetings to get 1 to 3 bites, then you haven't done enough.
It's basically a sales process. You're running a sales funnel. You identify your targets and you start doing cold outreach, warm intros, whatever you can do to get, your deck in front of them and try to schedule meetings and following up. Hey, thanks for looking at the deck. And I, get 15 minutes. It's the same thing as like selling a product. You're selling your startup in this case, but yeah, same process.
The only difference is my close ratio sits between 30 and 40%. And after the friends and family round, by the way, so in the friends and family round, I did a crowdfunding campaign because of our social influence. And I met with 190 individuals, and I closed 149 of them. So that was a really, really high close ratio, even if it was $100, right? I got anywhere between $100 and $50,000 checks. That's what I got in that crowdfunding. So I was pretty impressed. But then when I started hitting the VCs up, I was like, oh my God.
Yeah, you're lucky to even get them on a call. I mean, I had a founder this morning and he was like, hey, Brian, it looks like you're out of town next week and maybe the week after too. And I'm like, no, I'm just back to back. Like, that's my life. That's the life of a VC. We're just back to back to back all the time. And now I see why, as an outsider looking in, it was such a cantankerous bunch of folks, right? I was like, gosh, you guys are really, irritable. And it's because we're like an ATM machine that everybody wants to like figure out the PIN code, right? And so we're just sort of constantly bombarded with pitches and, hey, can I just talk to you? Can I just run something past you?
Get some advice?
Can I get some advice? I get like 50 connection requests a day on LinkedIn at this point, and I can't even get through them all,
Yeah. If I had a penny for everybody who asked me, can I get some advice and spend a few minutes with you? It's like, I finally got to the point, especially talking from a social media influence perspective. Look, I make my money off of talking to people, right? So if every person I spend, half an hour with that asks me for it, like, I'll never be able to sell anything. So, you've got to be really, really, really careful. And I understand that on the venture capital side as well. Let's talk about the things that a venture capital firm is looking for when they're evaluating a founder. And I know I've got a lot of different ideas of things that people are looking for, but you've got a whole framework that you guys use specifically that I think mirrors very closely with a lot of things that I've seen as well. And so in your framework, you talk about, or you emphasize the technology, product, design, all those things that are clear.